Today is Tuesday, January 28th, and we are after the Apple earnings. So we're going to take a look at that. Look at the volume again. Very strong in the Dow, but then there's a lot of Dow stocks that are of interest out there, right? Like Amazon, like Boeing, like Pfizer. All had big days today. NASDAQ, average volume. S&P, average volume. Advancers to decliners in their whole universe was about 70 to 25. But more accurately, on the New York Stock Exchange only, short of 3,000 issues traded, advancers led decliners by a huge number. It's the opposite of what we saw yesterday. So everything that happened yesterday didn't happen. And we're going to see our oscillator bounce back up as it did here, as it did here, and here, and here, and here, because it never stays under this oversold line for 2 days in a row. It always will go back up to at least the oversold line. So that's where we should be. In fact, we'll be a little bit higher. We might even be right back to where we were on Monday. Let's take a look at the S&P. Up 32 points, 1%, a little bit less than yesterday's drop, I believe. But we did one thing important. We closed this gap. Remember? Let me just draw that gap for you. We've got this nice little support resistance tool in motive wave. So I'm going to show you the gap. And there's the gap. We could even make it like this. You know, some people will take the wicks and the tails into consideration. And if you do that, then did we close the gap? Yeah, we spent the whole day doing just nothing but closing the gap. Again, still on a collision course with the cloud is what I believe. So the biggest earnings are coming in the next couple of days. I mean, the end of the biggest earnings. So that's where we're going to see the market either say, okay, let's go back and take a big breath, and what did we think about the outlook for the next quarter, because those earnings are history. Apple is having a heck of a day. Now this is after market, extended market. You can see we can look at extended market in motive wave. And where are we? Amazing. We have come up to hit this 200% Fibonacci line, which is from here to here. Repeat it again. Okay? So if we go back here and we look at our weekly, we've got this 200% Fibonacci. Let me just highlight it for you by going in here and saying show the fill. So this is the area. It's this pullback here of 91 points, which has now been doubled. You can barely see that here, but it's 181 points from the points that I've drawn. These Fibonacci's are very important, and automated traders are looking at that. Traders like you and me are looking at it, and we're placing sell orders here because we know that's what's going to happen. In my case, I had a whole bunch of options, and they're all going to be profitable tomorrow, and it's going to be an excellent day. Amazon raced up ahead to 1860, but got held back by this orange line, which is Ichimoku average that we don't talk about here, so I won't talk about it now. But it's reporting earnings, I believe, Thursday. We're going to take a look at another earnings site in a second. Caterpillar, not so interesting, just clung on to the 200 moving average. And the Chiku span did what? Not much. So we're going to keep an eye on the Chiku span. Let's grab that Chiku span if we can, that arrow. Can't grab it, so we won't bother. Volume was pretty low in Caterpillar. Home Depot responded nicely to the consumer sentiment, which is up at 131% now. Tesla up $10, still not making a new high. Reports earnings tomorrow after the bell. Shopify, house on fire, bound to make new highs now. So it's coming around this 138.2. Couldn't break away. It broke away one day, couldn't break away the next day, came back to test the next day, fell below like all stocks yesterday, and it's back above now. I keep saying let's take a look at it, but I'm just too busy with other things right now. AT&T is the big one that concerned me now. And I changed all of my short positions on my 1,500 shares. And what I did is I actually closed my short March 38 calls, and I ended up with a $700 profit over all of the 38 calls that I've had that I've been rolling for such a long time. I'm now optimistic that AT&T tomorrow morning at 7 a.m. is going to report really good earnings. So what I did is, since I have 1,500 shares, I bought 15 February 28th 40 calls, but I sold 30 41 calls. That spread cost me 3 cents because I'm selling 30 when I only bought 15. So, sorry, it cost me 5 cents. I ended up settling for 5 cents. So the most I can lose on that trade is $150. Sorry, $75. Not much. But I can make a whopping amount if it goes up to 41 because I've got the 1,500 shares which are going to be taken away at 41. I'm already eligible for the dividend, so I really don't care. I would love the stock to end just short of 41. So I'll be able to keep all of the short money, make a heck of a lot on the long money, the long 15 calls, keep the 1,500 shares, and then sell more calls because AT&T is not the kind of stock that's just going to run away on us. We've still got this 39.62, which is the previous high. And if we look all-time high, well, not all-time, but since January 2016, 43.50 would be a full retrace from January 16. So that's 4 years ago. We'd be struggling our way back. So I'm happy with 41 and 40 as my call spread. If you have any questions about that, just ask in the section below. WDC, Whirlpool reported earnings this morning, and look at that. What we've done now is we've got a trend line here, 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 and here. So this sort of wedge that we drew a long time ago has this at the bottom, this at the bottom, and is really still looking for a third point to confirm that it's a real trading wedge. And you know, if we have a little bit of profit taking, because we stopped at exactly 50% Fibonacci from this high here down to this low, we've retraced 50%. So we might have a little bit of a pullback before we move further. And as we go forward, this might prove to be a real wedge. And we'll see how it breaks out. The volume was not too bad either. VIX, of course, pretty much gave back everything that it had the day before. Not quite back to where the volatility was on Friday. Look, the coronavirus didn't go away. Apple mentioned it in their earnings release that they are hesitant, or they gave a wide range in their forecast for next quarter because they don't know how the coronavirus is going to affect them. It'll affect people shopping in China, but more importantly, it'll affect people going to work in China, where they make the majority of their phones. They make a number of models in Brazil, but certainly not enough to fill the gap for China. And they make a bunch in India, but that's for the Indian market. So, but their estimates for next quarter are still higher than what the market estimates were from the street. So that's why Apple stock is just rocketing after hours. So here we are. Let's take a look at the 5-minute chart, and you can see that we hit that resistance 4 on the Woody's pivot, and we've pulled back. But the key thing that we want to be watching, of course, is this 200% Fibonacci. Tomorrow should be interesting. I told you I'd go back to and show you another earnings site. Here's a good one. It's called Earnings Whispers, and you can get a lot of free information off of this. And you can see today that you had most of the companies reporting showing that they beat market estimates. They're green. They did not beat market estimates if they're red. So most of them are green. That's your takeaway here. Guidance was down for AMD. So they're guiding down. Apple is guiding, they say in line with the market consensus, but it's actually a little bit higher. Take a look at that in the press release. These are sorted in order of popularity. So Starbucks had a 4% surprise. Apple had a 10% surprise. Starbucks didn't give any guidance, I suppose. Let's look at tomorrow, and let's see what's coming up tomorrow, Wednesday. The key ones in the morning are Boeing, AT&T, that's the one I've got my eyes on, McDonald's, MasterCard is going to be a big one, General Electric is going to be important, Anthem, General Dynamics, Corning is going to be important, Textron. So it's really quite the morning tomorrow. And then after the bell, we have got to have Tesla there somewhere, because they are reporting tomorrow. Isn't that interesting? I don't see Tesla here. But Tesla is reporting, pretty sure they're reporting tomorrow. Let's take a look at Thursday and see. Thursday we have Coca-Cola. UPS is always an important gauge of the buying economy. Verizon, AT&T's competitor, cigarettes. These two companies are military defense. Let's look at after the bell. We don't have Tesla here either, so I'm not seeing something obviously, but Tesla is tomorrow. Thank you very much. Sorry I went so long.